So I actually disagree with Moody's. No surprise here. I think local government debt, an aging population, and a weak real estate market still are the three key areas that I'm most concerned with. I'm not overly worried about the tariff war and the trade war. I think, I don't want to say Chinese are exuberant right now, but they are happy because they feel that China has the upper hand in the trade war with Trump. I mean, basically everything that America sells, except for semiconductors and ethane, China can buy elsewhere. So instead of buying American beef, they're buying Australian beef. Instead of buying American oil, they're buying Canadian oil. Instead of buying American soybeans, they're buying Brazilian soybeans. So the Chinese consumer over the last 2 months has increased their happiness and optimism, highest since I've seen in the last 6, 7 years. So I'm more bullish on China's economy now than any time since 2019. And you see that reflected in retail sales. They went up 5.1%. Tourism went up 8.1% during the Qingming Festival. So the biggest issue is not the trade war. China's winning. China's not going to back down. Everybody in the world knows that, except for Trump and Scotty Besson, apparently. The biggest issue still remains local government debt, an aging population, and weak real estate prices, Karen.
Shaun, that feel-good factor that you demonstrate also in the industrial profits numbers for April as well. We saw that picking up some pace. But just what are the self-help measures going to be from here? Because it feels as though some of it has been designed to put a prop under the domestic economy. You're saying you can see that firsthand. But at what point do we conquer some of those long-running issues that we talk about around local government debt? Because to me it feels as though that could get much worse if we're going to see further self-help domestically.
Yeah, it's going to take several years to fix local government debt and the real estate sector. And I think, Karen, that the government doesn't really want to fix real estate. Prices have dropped 20 to 30%. I think the Chinese government wants this to be a soft landing. But there's some key numbers. First of all, overall, in third, fourth, fifth tier cities, prices only dropped 4% year over year last month. That's better than the 5 to 8% from last year. And in Shanghai, prices in the 180,000 RMB range, or about 25,000 US per square meter, are actually soaring. So you're seeing a rebound in tier one cities like Shanghai and Shenzhen, and you're seeing some sort of a stabilization in third through fifth tier cities. I don't think the Chinese government wants to reinflate the bubble. They're okay with sort of a stabilization and slow movement. I do like some commodities though. Right now, chrome ore, which is one of the keys for chromium, which goes into stainless steel, which goes into construction, is actually booming right now. And Chinese buyers are buying it up very quickly. So you're starting to see a movement. But especially, I think what's important, Karen, is on the unemployment side, it's actually getting better. You're not seeing the mass layoffs. You're not seeing the mass cuts in salary that you saw at the end of 2024. And that's why I think over the next 6 to 9 months, you're going to see a recovery in consumer spending. Don't forget, Chinese households are sitting on 20 trillion of household savings. So they will buy when they see value. They're holding on to their pockets. So instead of Starbucks, they're buying Luckin. But if they see something good, such as Hoka or On in sports apparel or Lululemon, they'll buy that. But they'll skip Nike because it's seen as overpriced and not really cool. The consumer rebound, green shoots, but it's starting to happen. It's not booming, don't get me wrong, but this is the best China's economy's been in the last 6 years.